The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the September 4th wonderful Wednesday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call reinforcing the habits of success. You know, when you are doing all that you can possibly do and you are successful at reaching your expectations, I say keep doing it, because success is one of the best forms of motivation. Psychologists, they call it positive reinforcement. Now, there are two major benefits of positive reinforcement. Number one, positive reinforcement builds great habits. If the habits you're practicing are increasing your success, keep doing them, because your success reaffirms that these are good habits. Kind of logical, right? And it's always good to review our habits as well. You know, if you haven't done this lately, spend just a few moments, write down your habits down on a piece of paper. You know, because by reviewing these, we may find that some of our current habits are actually inhibiting our success. And those are the rituals or the habits that we need to get rid of. Now, the second benefit of positive reinforcement is that it creates the energy or the fuel for additional achievement. It gives you the drive to do more of what's right. And when you are doing all that you can do, when you've got great habits, when you're making progress, when you fuel your ambition, guess what? You won't need an alarm clock to get up. You'll wake long before that clock goes off. Remember, your success fuels your ambition. And your ambition, well, it gives you that extra energy. And together, that is what will pave the way for more success. Let's go check out the success or failures in the marketplace right now. Dow futures off about 22 points, trading out at 14,805. You got the S&P futures off a point and a quarter at 1637. NASDAQ futures up 10 points at 30.96. King dollar back 6 ticks. So relatively quiet in the currency market. Well, that is, unless it's the hard currency market. We're going to take a look at Goldilocks first. It's trading down 19 bucks right now, trading at 13.92. Silver, the biggest hit, off about 90 cents right now, trading out at 23.54. We've got light sweet crude back $1.21. Natural gas off a penny, so no real movement out there. If we take a quick peek over in Europe right now, you've got the DAX is off 69 points, FTSE down 35. A mixed bag over in Asia last night. Had the kneecap 75 points. Maybe it is that little smaller Gartley buy pattern that really is in effect there. We'll go take a look at that market. Hang Seng was off 68. The Shanghai up 5 points. Our calling number is 877-927-6648. If you give me a call, we can take a look at your stock chart. Be happy to answer whatever question is you may have. Let's start off by taking a look at Goldilocks. As I mentioned, trading out right now at about $13.92, off about $19 and change out here. Had a nice day yesterday. In fact, if we take a look, you can see gold here. It made an A to B equals CD, very close to completing it. The 8-point on this was coming back to the June 28th low, 1179.40. That's your 8-point. Your B point, when it did move into that overbought condition, was back here on July 23rd out there, 1348.70. Makes a retracement. Now, the retracement there, pretty small. If we take a look at that retracement, that A to B leg, what we'll see is really just below a 0.382 retracement. So it does say that it should have more energy to the upside. But, of course, it did complete the 1-to-1. A to B equals CD. It did that on August 28th when it got up to the high of 1434. Now, the pullback on this C to D leg, you can see yesterday, the actual 0.382 level, 1373.60 is what it got to. 1372 would have been the actual 0.382. So pretty strong trend, but we are seeing some reversing signals. We're just seeing gold really pull back and work off some of that bought condition. Says that gold, if we take a look at what really should happen out here with Goldilocks, like any move out there, if we really go from our A point to our D point, that'll give us our real target area. In fact, I'm going to go ahead and get rid of this one, this retracement there. It says that, we should see gold pull back to about 1336 or so. That'll be coming right back into that B point of that A to B equals CD up into that July 23rd area. So that should be the first stop on the way down if we can get Goldilocks to pull back just a bit more. Silver, Let's go take a look at Hi-Ho Silver. That's trading off about almost 3.5%, maybe a little over 3.5% this morning, down about 87 cents right now. Silver here got in, really silver made an A to B equals CD as well, made more than a 1-to-1. If we take a look at that A to B equals CD, start off with your A point down here on that June 28th low at 18.18, and your B point right up here at about, July 22nd, the high was 20.57. We had 20.59 on July 23rd. That's the move that we'll use. What silver did was a 0.618 retracement, made almost a 1 to 2.618 A to B equals CD. What it did run into was that 200-day exponential moving average, and now today we might be saying a little bit of a bearish engulfing candle out here, but we have a lot of time left in the trading session. Now, if we take a look at that A to D leg, your dead cat bounce, that should really be our first target area that we should be looking for silver to pull back to. That would be a price level of about $22.47. Of course, a normal movement all the way back down to $20.83. That would be, people would be screaming that the move in silver is over. Of course, that would be nothing more than just a normal retracement. We'll see. And really what we've got going on is silver is simply working off that overbought condition. Got in that extreme overbought condition and stayed there for quite a period of time, August the 14th all the way through August 29th. So about 2 weeks worth of trading out there. Let's go check in on the futures contracts. Let's take a look at the dailies. We'll start off there. Let's take a look at the week links out here. Let's take a look at the Dow, see what it is doing. Right now, trading out at 14,807. So yesterday, what did we have in the market? We had that big, strong rally attempt after the markets being closed during the Labor Day holiday session, and we saw a sell-off shortly after. I believe Boehner came on the air and said, he's all for throwing missiles over to Syria. And we saw the markets push down. Now, inside the Dow, what it wasn't able to do yesterday as far as the sell-off, and it must make us say, something to think about, was to push down into that June 24th level. June 24th level inside the futures, the high out there, 14,731. So yesterday, really just kind of an inside day. What we do know is the Dow here has been moving sideways ever since August 27th, so still trading with inside that bar. The top of that bar is 14,943. What the bulls and bears need to be watching is that 14,943, because should there be a close over that, that would indicate a shift in trend. Where would that shift in trend take it to? Well, what the Dow has not done, what the Dow futures have not done, is they have not gotten back up here to test the rising price channel that it broke here, and it broke through that level back on August the 15th. And so, but of course, it needs to get some real energy in order to be able to do that. Likewise, a break below that candle from August the 27th, to me, that'll be a continuation move to the downside. That would say that the Dow would then go test the low of June 24th out there at 14,474. So the weak links here aren't necessarily showing anything other than just building some cause out here with these small bodied candles that have been in place here since August the 28th. Let's go take a look at the S&P 500, slightly stronger than quite a bit stronger than the Dow, but also really we'll call it the second weakest out here. Now, let's get rid of the Gartley. Let me see here if I can always put this Gartley buy pattern back, or Gartley sell pattern back in place here. Give me a moment to delete that. So if you're watching us on TigerTV, you're seeing my charts in you're not seeing them in HD. If you'd like to see them in HD, just switch over to your members page at TFNN, because you've got access to the Tiger's Den. So you've got that for the next couple of weeks while we do our in fact, if you haven't signed up yet, folks, you need to make sure you get over to today, because tomorrow is the end of the sign-up session for our $10,000 virtual trading competition. So you want to make sure that you do that, and that also gives you access to the Tiger's Den for the next couple of weeks as well, and you can see these charts in HD. Of course, you can catch the archive of this show on Channel 9, and you can watch a live stream of it on your smartphone device by going to the homepage of TFNN.com. Over on the right-hand side, you'll see that button, 3 little smartphones. Click on that, and you'll be able to see the chart we're looking at, which is the daily chart for the ES Mini. Now, what it did yesterday, now, if we pull this back a bit further, the black lines that you're looking at on my screen, the diagonal lines, that is the rising price channel. That just simply was used by identifying co-located, doesn't matter whether it's an open or a close, co-located opens and closes in order to form that channel line. The red line is the trend line out there. I'm going to go ahead and get rid of the trend line here for the moment, just simply to not confuse anything. So now as we take a look at this, what the ES Mini did yesterday, because it had broken through that price channel, did it here on August the 27th, and yesterday was its first test up to see if it could get back inside, and it was rejected. It got up to a high yesterday of 1650. Inside that area, it was trying to test it, of course. It, too, is traveling inside its large, what we'll call the August 27th candle out there. So it, too, did not provide us with much information yesterday other than the fact that it tried to get inside that rising price channel and couldn't out there. Now, what we can see is that blue lines here, this is the descending price channel that price has been traveling into. So the question's going to be, will this thing just bounce around here? Because what it should do, folks, it should move up and be able to test the top of this this descending price channel at some point in time here. But we'll need to keep watching it. Today, the key's going to be 1626.25. You see a close below that, and you know what, folks? It'll be down to that June 24th area post-haste. 877-927-6648. We'll be right back, folks.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. In the pre-market here, we've got Francesca's Holdings. FRAN is the ticker symbol here. They are trading off about 23% this morning, so getting quite a haircut. Out with numbers, their second quarter net sales, 89.5 million versus 76, so they're growing their top line out here. See what their net income was, 14 million versus 12.6, so they must be guiding, or they must have missed guidance out there, because they are truly getting hammered. So trading down 23%. Right now, the last trade fired off at $18.46, so going to be quite a gap down. If we take a look at Francesca's Holdings, we can take a look at, as a high was made out here back on May 21st, had a little shooting star candle and some follow-through on that very next session out here, and that was the session of May 22nd. So that shooting star, that is the opposite of the hammer candle. Now, the hammer candle that shows up on the chart out here takes you all the way back to February 22nd, 2013. We can see that that area here is going to fail this morning. It already did fail once before, was back here right around the August 15th time frame. So this thing is going to have, let's take a look at the confirmed, let's see if it's confirmed A to B equals CD. The B point on this is June 20th. At least we're going to take a look at a couple A to B equals CDs to the downside on Francesca's Holding. But the first one, June 20th, the low out there, $24.43, did 2.2 million shares, and as price passed through that level, only 887, so it did it on lighter volume. Let me put the volume line across the bottom of the screen out here, see if this thing ever got any volume to the downside, and the answer is, well, it looks like yesterday may have been that day. In fact, it was, as price moved through the downside. So yesterday you had volume of about 2.5 million shares. So if we take a look at the first, well, boy, there's a number of A to B equals CD patterns on this one. If we take a look at the first one we're looking at off of the May 22nd high, down to the June 20th low, and all the way back up to July 16th out there, when it got up to 29.54, your 1-to-1 is 21.54. Well, it's blown past that because it's going to open up right around the $18 level. $18 is going to take it all the way back down into the lows out here from December of 2011. So this thing here, when it opens this morning, there are not going to be very many shareholders in this thing that are in the green. In fact, this thing had an IPO date back in July 22nd of 2011. Range was 22.46 to 28.85. This was, I don't think it is. Maybe it still is one of the IBD stocks out here. I know that it was at one point in time. Well, it's not going to be. If it is, it's not going to be on the IBD list after today's performance for sure, because this thing is going to go basically run to that 1660-ish area, get all the way back down to the lows out here, right around 1546. So that is on Francesca's Holdings. Hope nobody out there has actually got that one. If we take a look at, you can see here on this weekly chart, as this thing had volume off of the highs out here, we talk about markets will allow you to let you back in maybe a couple of times, give you a couple of different opportunities to sell. In the case of Francesca's Holding, if you take a look at, let me just delete everything off this chart here. We'll just start with the clean chart, or almost clean. There we go. Take a look at Francesca's Holding. Volume off of the high right here on September 5th, 9.6 million shares, and price made its way back up towards that level. The last time was when we saw that shooting star and that A to B equals CD down that we just posted out there, and then a move low lower on that following session on May 22nd out there. So it got back into that downdraft candle, that supply line on September 5th, and now this thing's going to run all the way back down to the bottom. You can see on a weekly chart here, that's probably one heck of a bearish engulfing. Let's just switch it over to the weekly chart. You want to make sure that you're always paying attention to daily, weekly charts. If you're trading the daily, take a look at that bearish engulfing. Is that wide price spread and accelerated volume? Everything to the downside out here, and that was on Francesca's Holdings. Let's go take a look at Guidewire, GWRE. That, too, is trading to the downside. Now, Guidewire also, I believe this probably still is an IBD stock. This thing had an IPO coming back into January 25th. Looks like a lot better stock chart than Francesca's Holding. January 25th, 2012, the debut was a range of about $16.45 to $18. Closed out at $46.48, so pretty nice performer. But this morning, it's trading down about a little over 5%. The last trade fired off at $43.90. Let's take a look at what they generated out here. They also beat. Let's see, their Q4 earnings per share, 19 cents versus 16 a year ago. Revenue of 96 versus 67 million, and net income of 12 versus 3.5. But they must be also guiding lower here because this stock is going to open up at $43. Somebody thought this thing was going to pop yesterday because it has some decent volume up at the high. The low of that session, 45.96. It's going to open up below that area. We'll see what kind of volume is coming out of the Guidewire when we get right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow down 17 points, trading out at 14,815. S&P flat at 1639. Composite up 6 points at 3618. Russell 2000 up 69 cents, trading out at 1016. Apple on the move this morning, up $12 and change, out over the 500 level. Microsoft down 53 cents, out here trading out at 31.36. Google off just slightly, down 75 cents. It is Apple in the lead in the clubhouse, up $12, up 2.5%. Rochester Medical, ROCM, up a nice 43% this morning. That's up $6 and change. See if there's some kind of what do we have here? CR Bard by Rochester Medical for $20 a share, and it's trading at $19.87. Dollar General up 3.5%, up $2 right now. Sienna Corp, CIEN, up 9% this morning, up $1.75. SanDisk, haven't looked at that stock chart for a while. SNDK up 3% this morning. Tempur Sealy, the folks TPX must have got a good night's sleep. They're up 3.5%, up $1.44. To the downside, Ryan Air Holdings off 14%. Franciscus Holdings down 22%. That's off $5. Ryan Air was down about 7. LinkedIn off about $3. Haynes Celestial Group off about 3% this morning. That's down 2.30. Ubiquity Networks, UBNT, off 6% this morning, down to $2 and change. Our call number 877-927-6648. Give us a call, folks. We can take a look at your stock chart. If we take a look at Guidewire here, did gap down this morning. Volume so far behind the move 443, but this thing has got a lot of nice little support out here. If we take a look at the last real breakout on this equity, going back to Guidewire, GWRE is the ticker symbol. Wide price spread, accelerated volume back on February 27th, 2013. Nice big gap up. If we take a look at the top of that, as price had moved higher and then pulled back into that area, notice a little hammer candle that is out here on the daily chart. And that hammer candle came in as it was testing the top of that gap up level. This was back on June the 6th, so it's got that little hammer candle. It's got this, certainly the support of this high volume bar out here at 38.43. Trading, okay so far today, but I don't see any real substantial damage, at least not just yet. We'll have to see how this trades for the next couple of hours and see if this is volume off of the highs out there. Was a little tired yesterday when it formed that little doji candle up there at a price of closed at 46.48. The high was 47.43. That was on the Guidewire. Let's go check out Apple. Let's go see what's going on with some of our core stocks out here. Apple on the move, up about $10 right now. Let's go see what kind of volume is behind that move. Should be right here. There we go, my upper right-hand corner. So we take a look at Apple. So trading out right now at $498. This is, let's see here. Let me see what this thing is doing. So it made the 1 to 2A to B equals CD. That was a beauty. You know, if you do a 1 to 2A to B equals CD, as you know, if you've got the art of timing the trade, a market is going to do something different. Of course, Apple also getting into that extreme overbought condition. And really, it's been just simply moving sideways here. No real volume or anything off of the top. So it looks pretty good. If we put this on a little bit longer term time frame, actually, first let me go ahead and pull this back out here. Let's pull this back. So what Apple's done is it's filled that gap that had that big, large downdraft on January 24th out there, 52 million shares to the downside. So it has completed that and filled the gap. But the pullback here, I'm going to just go ahead and pull this back here. Let's take a look at the retracement. Let's take a look at the overall retracement from the low from June 28th all the way up to the high that was put in here on August 19th. And we can see that retracement very, very shallow. In fact, I would think that Apple right now would find some support at that 200 period exponential moving average. That also is the last time that we had some significant volume inside this equity, about 31 million shares. That is on August the 13th. So expect Apple to find some support if it does pull back, if it does form an A to B equals CD down, and it could. There's a small one here that's forming, that's potentially forming. That would look like this. That would be coming off of the August 19th high down to the low here on August 28th. We'll use today's high as an example. And your 1-to-1 would just bring it back to about the 470-437 level. 472.37 happens to be your 200 exponential moving average. And also the right around the low, 468.05 of that August 13th high volume, wide price spread accelerated day out there. So Apple not looking too shabby out here. But let's put this on a weekly chart. Let's see what Apple is actually doing on a weekly chart, see if we can find any better patterns out here that may be forming inside this equity. What we can see here inside of Apple, take a look at this volume, not the volume bar, the wide price spread bar from August the 16th. Now we can see it's coming into the supply line. That was clear on the daily chart. The supply line we're talking about is the week of January 25th, 2013. So we can see that is, and also you can see even a little gap out here. Let's take a look at that. So the gap that we're talking about on a weekly chart is from January 11th. The low there was 515.20. The high of the next trading session was 510.71. So we can see that this is the significant area of resistance on the weekly chart. And that's going to be very important to note. Why? Especially whether you're long or short. Because once you get above an area of resistance, it will become what? It'll become support. Now, I'm not saying that Apple's going to do that, but we do have this wide-ranging bar coming into that area. You can see you basically have some small-bodied candles on the weekly chart. There's no bearish look here other than knowing that you're coming into an area of resistance. That's clear. And so the price point that we really want to be watching, in my opinion, inside Apple, it's going to be the range of about 510.75 to, actually closing the gap, which is at the 515.20 level. I would say if Apple closes above 515.20, in fact, what you'd really like to see it is close above that January 11th candle, which is 531.89. Then you've got Apple being able to, then depending on the volume, it could be actually on the weekly chart, setting up an A to B equals CD on the way up here. So you can also see coming off of the all-time highs at 705.07 down to the lows that were established back on April 19, 2013. You can see that what Apple also did was made that dead cat bounce, got up to the 0.382 level. But the real key is going to be watching this resistance area, because if Apple can get above that, old resistance should become new support out there. So that's what the weekly chart, and that's the reason why we like to take a look at, levels above and below. Yesterday we spent time taking a look at the monthly charts out there. On the monthly charts, when we take a look at the NASDAQ composite, if we take a look at the NDX 100, let me put the monthly chart up here. The monthly chart showing us no bearish configuration yet. And the market, in order for these markets to really roll to the downside, you're going to need to see some kind of bearish signals here inside the NASDAQ 100, inside the composite, and we don't have that. In fact, if you're watching us on Tiger TV right now, I've got the monthly chart for the NASDAQ composite on the screen. We can see here that price is traveling in that rising price channel. Looks like it really wants to get up and test the top of that area. But at this stage, on the weekly chart, no bearish signals as of yet, and that's important to be paying attention to. Same thing if we take a look at the NDX 100. If we go take now with the NDX, as you can see on the daily chart, we've got that island reversal. So we truly, on the daily chart, have got to keep our eyes open. But this, just like in the case of Apple, and taking a look at the weekly chart and taking a look at that line of resistance out there, because it could become new support, so we know what we want to be paying attention to. Also in the NDX 100, we've got to be paying attention to this island reversal, the most bearish of candles, either at the top or the bottom. In this case here, this is an island top. And we want to be paying attention to this, because if for any reason whatsoever that gets taken out, that tells you that there is strong momentum in place out here. Right now, that is not the case, and this is the bearish signal inside the strong index out here. So that's helping to glue everything together with regard to what it is that we're seeing inside the Dow, inside the S&P 500 out there. And then yesterday I mentioned in the case of the IWM, on Friday's close inside the IWM, although very subtle, actually confirmed an A to B equals CD down. But nonetheless, we need to pay attention to these important areas of support and resistance because they provide us with a ton of information. Now, I want to go back to those core holdings out there. We were looking at Apple. I want to go ahead and take a look at some of the other equities inside here. Of course, IBM is one that we want to be paying attention to, and IBM right now trading out at 182.74, so it's trading down just a bit. That's putting a little bit of pressure inside the Dow, which is off about 10 points right now. And the reason now I'm going to put the weekly chart up here for the time frame of IBM. We want to be paying attention to this, especially because you've got the consolidation. It's a 30-point consolidation range that has been in effect basically since January of 2012, and the lows of which are now being tested inside of IBM. So that's the two red lines out here. We want to be paying attention to this because a break to the downside would say that, in this case here, the downside, meaning the close below, I don't know, I'd say, what you want to do is give it a little bit of room. Close below 179.32. That would be the signal that you'd see a 30-point move to the downside. So somewhere in the 150-ish range out there, because right now it's really the 182 consolidation level that it's trading at that it would be breaking. So around 152 would be the number. Likewise, if this area holds here, that would be providing us with some important information. Now, on the daily chart out here, the daily chart, let's go take a look at the volume pattern. That's the black line going across the bottom of my screen. So if you're watching us on Tiger TV, and you should be, or you should be listening or watching the archive, or really what you should be doing is going into the Tiger's Den because it's available on your members page. So you can see the charts in HD. And, folks, in let's see here, what are we talking about? It's 9:45 in the morning. So in about 25 hours and 15 minutes or so, that would be 10, 11, 12. No, that would be 26 hours and 15 minutes. So in 26 hours and 15 minutes, the gates will be closed. You will no longer be able to participate in the TFNN virtual trading competition. You can call the office and say, hey, it's 12:01. I really want to get in. I want to have an opportunity to win, $10,000 in cash awards, or really $3,000 for first place out there. Or I want the opportunity to win $100 just because I placed a trade, and there's going to be 5 randomly drawn winners. Doesn't matter whether the trade is a winner or a loser out there. I want that opportunity to make $100. Well, folks, the only way you're going to get in on that program is to sign up right this very moment. So 26 hours, the time is ticking out there. So please do that so that you can participate. The trading begins on Monday, September the 9th out there, and we would love everybody to participate in this great program that Tom has put together for everybody out there. Now, in the case of IBM, as we take a look at the volume, as we take a look at that gap up, that wide price spread, which was on the trading session of January 20th, 2012, 12.8 million shares. You can see a black line going across the volume bars on the bottom of my screen. We can see as price has moved down into that consolidation area, into the lower part of that range, and it has been a long wait, folks. It has moved down there on what? On lighter volume out there. Now, we have not seen any kind of sign of strength off of the bottom. You can see here the last time that we had price come down into this area and test that was back in July of 2012. That was on July 12th, and the volume there was 4.9 million shares as it was closing that gap out there. And that was going against the 8.5 million shares. We then did see what? You did see a sign of strength out here. His first small sign of strength was that wide-ranging bar here on the trading session of July 18th out there. And you had volume to the upside, 8 million shares. Really what you're looking for is a similar signature before you'd want to really step, in my opinion, before you'd want to step in on this equity here. Because right now it has just as much opportunity to bust to the downside. And if it busts to the downside, that's 30 points to the downside that you would be trading in. So it's come back to an area on light volume. Now what we want to see is some kind of conviction behind any move to the upside out there. And that would be saying quite a bit about the Dow as well. So that is on IBM. That should really be on your watch list. I know it is on mine. If we take a look here at Amazing.com, Amazon.com, AMZN. Right now that's trading out at 28 $289.61 out here. This thing has been in a, let's take a look at the retracement that this is done off of the June 24th level out here. June 24th looks like it's done probably about a 0.786 retracement. That was off a bit. It's done just a little bit below the 0.618 area, so that is normal. Amazon should find some pretty decent support at that 200-period exponential moving average, right around the 270 type level out here. Yesterday had some decent volume as it moved up, 2.8 million shares. That was going into the downdraft that it had of 2.5 million shares. So the volume pattern on this, not too shabby in yesterday's action. So where could Amazon move to from here? Well, if we take a look at just normal retracements, that would be coming off of the swing point high of July 22nd down to the low that was put in on August 28th. You can see that yesterday almost getting to the 0.382 level. So it looks to me like Amazon wants to get back and test its swing point high. Now that swing point high, that's got volume up there, 8.8 million shares. And that's the thing, you got to be careful, so for anybody short Amazon, well, we need to realize it has a high volume, untested high, July 26th, 8.8 million shares. You can see the volume on the downside here has really been on light volume on its pullback. It should also find some decent support right here at this high volume bar, which is going to take you into that 200-period exponential moving average. That is the bar of April the 26th out there. But at some point in time, Amazon wants to go and test the 313.62 level. And if it closes inside 295.55, and folks, it really should be able to do that because the normal retracement would be a 0.618 retracement into about $300. And if it closes inside that candle, that says you've got to be careful out there. Dow is up 7, S&P up 3. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow's up 20 points right now. S&P up 4. NASDAQ up 14. The New York Stock Exchange, a little weak out here. And that's the number we're going to be watching. It's up 16 points, about 0.2%. The key number today, 636. If we see net advancing issues above 636 out there, says the bulls have actually taken control of the market, something they haven't done for over a month now, if we pay attention to the New York Stock Exchange. Now, one of the other charts that we are watching most certainly is that Euro-Japanese yen out here. Euro-Japanese yen, as you can see, yesterday when we were on the air taking a look at it, it was breaking out above the little black horizontal line that's on my screen out there. That was suggesting momentum to the upside, but never really broke out with any kind of conviction, meaning a wide body or anything along those lines. That area is being approached again today. That level, as far as a breakout is concerned, I would be focused on the price point of, let's say, 131.28 out there. If it can break above that area, this is the Euro-Japanese yen. That'll put some fuel into the fire inside these markets out here. So that's one of the key numbers you want to be paying attention to. We also need to be paying attention to the volatility index. Now, it's well away from that 50-day exponential moving average line, so markets would have to be up substantially in order for that to be tackled. So you could have a situation where we see the bulls, where we see the McClellan oscillator get above zero. But, folks, as long as this VIX index is above the 50-day exponential moving average, it doesn't matter, whether it's at $15 and somebody says it's priced real low or what have you. As long as price is above the 50-day exponential moving average, it is in dangerous territory up there. That's when damage can be done inside these markets. Right now it's trading at 1644. The 50-day is at 1473. So for a bullish move, you need to see the VIX get below that 50-day period. Right now it's 1473. Tomorrow it'll be something different out there. But those are the two things that we want to be paying attention to. Most likely what we're taking a look at is one of two possible moves out there. The larger move, if we go back to that daily chart, we take a look at the ES-mini, we'll take a look at the indexes. Oh, I almost did that right there. We'll take a look at the indexes during the Money Master show. But the real key here is going to be, can the ES Mini get up and test the top of the descending price channel out there? And what it actually sets up, it sets up a really nice Gartley sell pattern, a 0.618. Oh, I should have taken that off of the top. Give me a moment. You know what? I'll have to, where is that? Give me a moment here to figure that out. I erased it, and I had it up here earlier. Should be coming off of, that should be coming right off of this candle right here. That should be our Got to grab the right tool about there. Let's just do this. I'm going to make it easier for me. Let's just take a look at the fib level, and you can see that the 0.618 gets you into about 1667. So somewhere between 1657 and 1667 are really the areas of attack from the bearish side. That's if, in fact, we can actually get the ES Mini to move up into that area. First, right now, it's got to tackle the 1650 level. That 1650 level is where it stopped dead in its tracks yesterday as it was trying to get back inside the larger rising price channel. So that's going to be the first area. If you see it close above somewhere right around 1650, 1651, that'll set up the potentially the 1667-ish range. Really, it's going to be bumping up along the top of this blue line out here of that larger descending price channel out there. So that's what we want to pay attention to. Folks, if you're off to start your Wednesday, have a wonderful day. Thanks so much for being here. And always remember, folks, you have an amazing power within yourself. And that power, it's so strong, it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Wednesday. Look forward to seeing you soon. Take care, folks. What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.